All right, good evening, everyone. We're going to start shortly in next 30 seconds. All right, so thank you everyone for joining in, and this is the weekly webinar with Week Ahead with Religare Technicals, which talks about markets, how the markets performed during the week, and what we are anticipating in the key indices, both Nifty and the banking index for the coming week, along with the list of stock that one should keep on radar. So let's get started with a quick disclaimer that the idea behind this webinar is to share the insight. It's not trading or investment recommendations. So for using any information shared during the webinar for trading or investment, please check with your financial advisor. Now coming to the weekly performance for the key indices, both Nifty and Sensex managed to gain nearly 1% each. So it's a decent close, but broadly we remain in the range 19,300 to 19,550 was the range for the Nifty during the week. It was the last half an hour of the today's session on Friday, which helped the index to inch and close towards the upper band of the same. But largely we were in range while the tone was on the positive side. And that is what reflecting in the sectoral performance also. So barring banking, which ended almost on the muted note, it was obviously this sharp surge in the IT pack in the last two trading session, followed by a very strong rebound in the metal majors. Reality, pharma and media also contributed to the move. Talking about the top 5 gainers and losers in the Nifty 50 basket, you'll see 3 names from the IT pack in line with the sectoral gain that we had in the IT index. So Infosys, Techem and TCS, and 2 names from the this metal pack, Hindalco and Tata Steel. So it's a clear reflection of what we saw in the sectoral front. When it comes to losers, it's like more of energy counters. So energy also ended muted in line with the banking. It was marginally in the green. That's why it's not on the list of losers. But Power Grid, NTPC and BPCL, traded in the pressure. UPL, we have been discussing this, on this webinar for last several weeks now, that it has been consistently, maintaining the negative tone. And in the last week, it has slipped below the major averages on the weekly chart as well. So that indicates this negativity to continue. At the same time, from the auto basket, we saw some profit taking in Maruti, and that's the reason why we have this stock in our list in the top 5 losers. So net, it was a week of consolidation. While the bias was positive, majority of sectors were positive. So now what we are anticipating in the index, so this is the daily graph. So last week, we have discussed about the kind of closing that we had last week. It was not very decisive, and we were having that view that Nifty might consolidate further to observe the gain that we had from 18,600 to 19,500 zone. So largely we saw the same tone throughout the week. It was Friday's session which helped the index to manage and end around the week's high and with a gain of over 1%. This kind of consolidation, very narrow range consolidation with hardly any price correction indicates that bulls are completely under control. So, the kind of move, this angle, it's almost 70-75 degree kind of rise that we are seeing in the market from 17,600. So that clearly indicates that bulls are completely under control. And after, surpassing this hurdle, 18,700, 18,900, which was the previous swing high, this move has strengthened further. despite the banking is not supporting much. It's not that banking is completely, trading against the trend, but we are seeing profit taking that we'll discuss in the next slide. But despite the underperformance of the banking, we are seeing that other sectors on the rotational basis is helping the index to inch higher. In fact, some of the index majors, so last week, interestingly, it was Reliance, which single-handedly helped the index to inch higher, while the other sector was slightly on the back foot. So this kind of move is what we are seeing in the index, and that's the reason why we are seeing that it has been maintaining the positive tone on week basis. So now this area, this consolidation zone low 19,300 to 550 was the zone that we've just discussed. So now 19,300 is going to be the first area of support when it comes to the next week. And this faint yellow line, which comes closer to around 1900, 150 zone, would be the next major support. Upside, since we have crossed 19,550, indications are positive that we are seeing rotational buying across sector. In fact, the banking also took the support around the key levels. So all these factors are indicating that this positive tone will continue, and 19,750 to 20,000 is going to be the next major hurdle after this consolidation zone breakout. Now, this sector holds importance, when we talk about 20,000 and maybe higher levels. And why? Because, the banking was also on the forefront, in the recent week, but from the last couple of weeks, we are seeing this, gradual drifting. But in this entire correction, from 45,500 to 44,500, there was hardly any pressure in the banking pack also. And, some of the other heavyweight, at times we used to see that SDFC holding strong while ICICI is witnessing profit taking, or Axis is witness profit taking. Some other day it was like, Kotak or IndusInd Bank is holding the banking index. So the pressure was not there, and we are still holding above 44,500, the level that we've discussed last week. So as long as we are holding above 44,500 on the closing basis, I don't see any reason to go short or look for shorting opportunity in the banking pack or in the market. See, understand this, why I'm saying this, because it's only not the banking, but the other sectors are anyways doing well. So be it auto, FMCG, reality, pharma, now IT, all these sectors are contributing. It's just that as and when the banking contributes, the momentum goes to the next level. So with this pause, they have consolidated their position, the kind of quantum that we had from 43,500 to 45,500. It's a decent retracement also. Consolidation zone wise also, if you will see this area, this 44,500, 43,500 was the range of consolidation, and we have tested that mark. So it is acting as a support now, the previous resistance. So all these factors are, indicating that this positive tone is likely to maintain in the banking space as well. But as we keep on saying this, that prefer private banks. They are less volatile. Earnings season has already begun. We have SDFC numbers next week. So all these factors are going to keep the volatility high. So stick with the private banking majors. ICICI quoting at the record highs. Axis, we are seeing a bit of a profit taking around the record highs, but the overall texture is still positive. Then we have SDFC. We have already seen decent correction after this all this merger related swing. Kotak, we are seeing recovery or a catch up move. IndusInd Bank doing well. Federal Bank of late has witnessed a marginal dip, but overall texture looks positive. So that indicates it's prudent to stay with the private banking majors. It's not that PSUs are not outrightly should be neglected. SBI, Bank of Baroda, Canara Bank, these are the top names wherein we get a decent opportunity as and when the market or the banking index progresses. Others are also contributing, but the trend is still down, especially when it comes to Union Bank, PNB, and the other names. So stick with the top 3 names, 4 names from the PSU banking space. Otherwise, stick with the private banking majors. So 45,500 that we have discussed is going to be the key support area, continue to be the key support area. In case if we breach, then 43,500, 43,200 is going to be the next major support. Upside 45,300, that's the immediate hurdle, and then 45,800 is something that we are eyeing for the next week. So this is only for the next week that we are discussing. Now let's talk about sectors and stocks which one should keep on radar. So as all the sectors are contributing on the rotational basis, FMCG is still holding around the record highs. But one such stock from the FMCG basket wherein we have seen fresh breakout is Colgate. So it's a decent consolidation for almost 1.5 years of consolidation in a triangle pattern, breakout, and now we are seeing follow-up move sustaining, and the stock has reclaimed the record high also of late. So this clearly shows that the kind of outperformance that we are seeing in Colgate within the FMCG basket is likely to continue. So there could be a bit of a consolidation after this sharp surge post breakout, but it's going to be a buying opportunity considering the kind of consolidation breakout that we have seen. Plus, the stock is also trading at the record highs. Next on the list from the metal space. So last week, if you remember that we were discussing about the IT pack is still 25% down from the record highs, and the next sector is metal or energy, wherein we still have room for the further upside. And few weeks ago we were discussing about Hindalco maybe witnessing a breakdown, because we were here wherein we had indication that this channel in which Hindalco is currently trading in may witness a breakdown, but it turned out to be otherwise. We have seen a base formation here and we are witnessing a recovery. Now, when the markets are at the record high, it's very critical to look for stocks or sectors wherein the risk to reward is favorable. So metal is one such pack. In fact, in today's session also, we saw that metal alongside with the banking in the last hour of the trade participated very strongly. So we believe that the risk to reward is favorable. Why? Because we have this very narrow range consolidation around the lower band, and provided in case if something goes wrong dramatically on the global front, we expect this positive tone to continue. Second, that once it surpasses this hurdle of previous swing high close to around the 450, 452 levels, it can gradually inch toward this upper band of the range. So we have decent room on the upside, and the risk reward is favorable because all you have is close to around 425, 426 is a zone basically where we have the support area. So Hindalco is one such stock which one can look at for long trades next week. Third, from the reality basket. So reality is also gradually inching higher, but in this basket, it's very important to identify or go ahead with a quality stock. Why? Because just in line with what we see in the PSU banking space, if the situation goes wrong in this sector, we see very sharp corrections. So overall reality is among the top performing names. The stock is trading at the record high, seeing decent consolidation this entire duration, from 1025, 1050 levels to this 750 levels. We have finally reached the record highs after, spending nearly 6-8 weeks of base formation here around the 100 EMA on the weekly chart, and then we are inching towards the same. So yes, there could be a bit of a breather which we usually see around the record highs before marching further northward and making a new high. So we are positive on reality, but be selective in this space. Lastly, IT that we've discussed last time also, if you remember, TCS, Infosys, we've discussed about TCS crossing 3400 mark would fuel very strong up move, and that is what we saw of late. Similarly, we have a fresh breakout in Tech Mahindra. So again, it's almost like a decent consolidation range, 950 to 1150, and finally we have this breakout this week. So after such a prolonged consolidation, almost a year long and more than that, in fact, I doubt that's likely to fade out anytime soon. So this could be one of the stock which should be on your radar in the coming week for the upside potential of 1300, 1350 plus levels. So net indications are favorable, both from the Nifty and the banking index. 19,750, 20,000 is what we are eyeing for the Nifty, provided we should hold a 19,550, which is the upper band that we were hovering around. Banking 44,500 is something that should be the make or break area. As long as we are holding above this, maintain positive tone, but prefer private banks. Coming to these stocks, we have identified stock from across sector. First name was Colgate from the FMCG pack, Hindalco from the Realty pack, Metal pack, Oberoi Realty from the Realty pack, and Tech Mahindra from the IT pack. So this is all from the presentation part. We'll discuss more during the Q&A. But before that, a quick poll. So please fill in your feedback so that we can start with the Q&A now. Please quickly fill this feedback so that we can start with the Q&A. And as like always we do, we talk about sectors, we talk about broader themes, not individual stocks. So please restrict your queries to the sectors or the overall broader market so that benefits the larger audience. If you're done with the feedback, you can start posting your question using that Q&A tab. All right, let's start with Q&A now. Okay, first question from Amit Sharma on the capital goods and consumer care space. So capital goods, Amit, we are seeing sustenance of the move. They've already done well, pretty well. In fact, ABB, Siemens, L&T, and they are trading closer to the record highs. So we may see some consolidation sectors which have already done well. So it's not that they're not going to participate in the move, especially if we talk about L&T, which is looking upbeat. Plus, we have this benefit of two ID counters like LTIM and LTI, which LT has a holding. So all these factors would help L&T to continue this positive momentum. But ABB, Siemens, they are likely to consolidate around the current levels. So one should I would say avoid, in case of the view is very short term, the other stocks, and stick with the names or the sectors wherein we have the risk to reward favorable. So just like IT, wherein we are seeing fresh move after very long consolidation, energy basket selectively. Then we have metal space, reality, pharma, and then the top performing names, of course, like FMCG auto, wherein we are seeing consistent buying. And consumer care, yes, sorry, consumer care space, again, it's very restricted move that we are seeing in this space. And I feel that it's prudent to stick with the, Colgate from this space, Titan in case if it corrects further, then we can see this stock gaining traction again. So being very selective is something that one can look at, but broadly the FMCG basket is something from this particular space is something which we like, and the other names like ITC, which is already trading at the record highs, and the risk reward is not favorable. I guess one can avoid those names. Okay, next we have Mr. Kamal Sachdeva on defense sector. So defense sector overall is doing very well. There's hardly any sign of exhaustion yet, be it HAL, BEL, and now we are seeing the other stock from the shipping space, Majgaon Dock, Kochi Shipyard and all. They are doing exceptionally well. But for fresh positions, I feel that one should wait and let the stock stabilize, means to witness some consolidation. So, after such a strong move, like in stock like Majgaon Dock, in case if you enter around the record highs, chances of, getting caught in the wrong side is high. So in stock like BEL, where we have already seen consolidation, looks positive and has potential to do well. Similar holds true for HAL. But other stocks wherein we have seen very sharp move in a very less time, let them stabilize. And in case if you have existing position, you should keep on trading your stop losses on every rise. So the view is positive, but since the stock have done, very well in very short time, there's a possibility that we might see some profit taking on consolidation. Okay, next we have Mr. Rajesh on the cement stock. So cement stock is not something which is attracting traction, of late. But yes, Ultratech, Ramco, Dalmia, these are names wherein we believe, after some consolidation, there's a potential to do well. In fact, a day before I was, eyeing Ramco for the next leg of the up move, though it couldn't sustain that move, but tone is still positive. So be selective and stick with the top performing names. So avoid ACC, Ambuja for a time being now, India Cement, though it may witness some recovery, but I doubt there'll be any meaningful surge. So prefer the top names wherein we are seeing traction, like Ultratech, Dalmia, Ramco. So, Mr. Raju, we have already discussed some of the names which look positive to us. So you can consider in case if your investment and trading methodology allows you, stock like Colgate Palmolive, wherein we are seeing traction, Hindalco, Tech Mahindra. These are some of the names that we have discussed. Chemical sector, Mr. AR have asked about the view on chemical sector. So I feel that this sector is facing headwinds. Obviously, is what the price action is also indicating. But there's no sign of recovery or completion of that corrective move. So I feel it's prudent that one should avoid any fresh buying in the chemical space and let this stock witness some sign of reversal, especially if the view is short term. Okay, next again, Mr. Amit Sharma on can Nifty touch near term 20,000 mark and a possibility of a breakdown. So that is what we shared. Yes, we are eyeing 20,000, provided the banking should also perform. 44,500 is something that banking should hold. And other sectors are anyways playing their part. So yes, there's a possibility that above 19,750, we are set for a new milestone, that is 20,000 mark in the Nifty. Okay, so this is something people might want to know because last week was a carnage in the online gaming stock, like especially in Delta Corp. Nazara was somehow managed to hold the losses. Delta Corp 160, 170 is a zone basically where we have very strong supports. And in case if the buyers manages to absorb all the supply that we are seeing, post this recent news announcement, there's a possibility that the stock might again witness a recovery. But I won't recommend buying online gaming stock at present. considering that they are trading against the market trend. So when we have stocks and sectors which are trading around the record highs, I feel that, just because the stock has declined 25% from the recent highs gives you the reason to invest or, to look for an opportunity. So opportunity is there, but in the IT pack, wherein we are seeing clarity, plus they are down 25% from the record highs. So there's a difference between, making investment or trading when we have risk reward also in favor and the momentum also. Okay, next, Mr. Kamal Sachdeva have asked about the EV. So EVs, it was a buzzing theme 6 months ago. Like, we were seeing that everybody was chasing stocks related to EV. Just name any stock, anything to do with the EVs. They were gaining traction. So Sona, JSW, I can't recall that entire name of that stock. Means we had multiple stocks, and Tata Motors obviously was gaining noticeable traction because it's a leader in the EV space in India as of now. But I shared the same view last week also, that instead of chasing any particular view or a theme which is in news for some reason or the other, it's prudent that when you thinking about investment, let's say for 5 years, 10 years down the line, and you have that kind of appetite that yes, I'll not be moving from this theme and I'm very sure about it, then it's fine. But otherwise, if you have a view of 1 year, 2 year, we are still seeing stocks from the across the basket doing well from the auto space. So Maruti has recently touched 10,000 mark. Hero MotoCo, we are seeing recovery, very strong recovery, rather a very strong reversal in Hero MotoCo. Bajaj Auto is anyways trading at the record highs. So barring Eicher, which has witnessed a very sharp dent of late, all the other stocks are doing pretty well. So I feel that one should not get carried away with this any particular theme. When it comes to investment, the focus should be more on where I can see the visibility 1 year, 2 years down the line. And yes, in case if you have a very clear view that I would like to focus on this particular theme, then scenario become different. No stock specific queries, please, that I have requested in the beginning, because the forum is for anything which is broader in theme, so that everybody gets some view that how they should approach the next week. Yeah, next stock is AMC theme. So AMC stocks have witnessed a respite, a very strong respite rather, after very subdued or underperforming performance for the weeks and months. But one should not jump into it, because there's a very sharp recovery. They were underperforming, and there's a possibility that we might see supplies mean selling pressure on rise. SDFC AMC looks comparatively stronger structure, wherein we are seeing not only the gains are holding, but it's consolidating around these previous swing high as well. Other than that, yes, stock may witness further traction, but one needs to be selective. So in this space, what I can recall is only SDFC AMC if the view is very short term. So yes, we can talk about this with Mr. Amit Sharma. Have asked that view on the recently listed means those new tech age companies or startups which were listed in last 1 year. So selectively, I would say that people were very disappointed with some of these names, and the stocks were also witnessing a one-sided carnage. But in last 6-8 months, we have seen improvement in some of the names. Paytm, Policy Bazaar, Zomato, these stocks have done pretty well, and they are not only inching higher, but they are forming base and then inching higher. Means there's a kind of accumulation that we are seeing with every pause and then follow-up move. But I feel that it's too early to say that one should jump into a particular stock. But yes, these three names is something wherein we are seeing consistent buying. So in case if somebody is looking for opportunity only in this space, then these are some of the names. But yeah, be very strict with the stop losses when you are trading these stocks, because you never know. Because we have already started with the earnings season. Anything in case if go wrong with the numbers, the punishment is going to be equally severe. So be very strict, and in case if you're not very disciplined about your stop losses, so then I would recommend you to avoid these names. Okay, so the hottest sector which could be in next fortnight, I feel that I've shared last week also. IT is the only sector wherein we have room, 25% room from the record highs. And the kind of move that we have seen in the IT majors in last 1 week or so clearly indicates that in case if this moves sustains, and there's a huge potential of a catch-up move in this particular sector. Other than that, metal and energy pack is something. These three could be the best performing sectors in next 2 weeks. So agrochemical, UPL, and in fact, the fertilizer stocks are also witnessing that due to monsoon, there could be some buying interest, but that is not the case so far. So earlier we used to see similar kind of a trend where during the monsoon, these sectors and stocks used to do well. But maybe after the earning announcement, the scenario might change. But as of now, there is no indication. And UPL at the beginning of the presentation itself, we showed that this was among the top losers, and there's a possibility that it might continue the underperformance. So please avoid UPL for a time being, especially if the views for buying. So consumer durables or space also, we are not seeing any participation, Mr. Area. So I feel that one should avoid, at least for a time being, this space, and let these names witness some sign of decisive recovery. Otherwise, one can in fact avoid completely for time being now. Okay, so for the second quarter overall, the best sector could be. I still feel that banking could be the best sector because in the kind of performance that we had in the first quarter, that might continue is something that we have the indications also. And selectively, yes, from the auto space, wherein we can see selective outperformance, based on what we had in the last quarter. Okay, so others are stock specific questions, which is of no use to the others. So I'm skipping those questions. In case if you have anything related to the sector or index, I'm happy to answer. Okay, so ancillary, okay, no, first we had, so liquor stocks also we've discussed last time that barring Redico and McDowell's, that United Spirits, all the other stocks are, it's very difficult to, place them in the same basket. So I feel that these two names are pretty consistent, wherein one can look for, buying opportunity. Last on auto and ancillary. So auto, anyways, we have discussed, they have done pretty well. In fact, they were among the best performing sectors, in the recent rise. And in the ancillary space, now we are seeing catch up move. So tire stock, they have done pretty well. Now stocks like Suprajit, and all the other related counters, we have seen some we name doing pretty well in the recent week. But I feel that auto looks slightly stretched at current levels. There is a possibility that we might see some consolidation in the auto pack, and that might reflect in the ancillary space as well. So aggressive buying is something that I would recommend you to avoid, especially the stocks which are trading at the record highs. So stock like Bajaj Auto, Maruti, which are trading at the record highs, they may witness further consolidation or a dip. And similar holds true for the ancillary space as well. Okay, next on paint and adhesive sector. So they are doing well. Asian Paints, Berger Paint, Kansai is not seeing a very similar kind of traction, but these top two names are doing pretty well. But after this surge that we have already seen in Asian Paint and Berger Paint, there's a possibility that these stocks might also witness some consolidation of profit taking. So if the view is short term, I would recommend you to avoid and let them consolidate at least for a week or two. And among these two names, I feel that Berger Paint has decent potential to do well if the view is, let's say, for a month or two. All right, so we have answered all the queries, I guess. Yes. And so yeah, with this, we end this presentation. Thank you everyone for participating, and next week, same time, we'll connect again. So till then, take care. Thank you.